and he's going to talk about the energy transition and reference a report from Stanford that came out, but he also was recently an advisor to the steering committee that was looking at a very large natural gas deal in the Mediterranean, which was canceled for geopolitical reasons. Then he's going to speak for 10 minutes about the transition, followed by Jennifer Warren, who will speak for 15 minutes about her insights. She's spoken several times. She's an academic writer. And then followed by Jim Peet of Fairfield Investments, and he'll talk about some of the energy projects he's working on and about Fairfield Investment. Bob, could you go ahead and tell us, what do you see in terms of the energy transition? Give us some idea of scale, where things are happening.
Yeah. Okay. Thank you for the introduction. It's a bit flattering. I've got a few grey hairs, that's for sure. At the moment, the interest that everybody seems to be moving into is SAF, which is the aviation fuel. There is in Europe something like, I believe, right now, and I'm reading from the latest report, 45 plants being currently looked at in Europe, 10 of which are pilot plants. And
what is SAF?
SAF is the synthetic fuel for aviation. It's a Kero-based fuel, and it's to replace traditional fossil fuels.
Thank you.
It's been around since 2009 in Sweden. Neste have got a product that's out there and it's approved, and there's a couple of products being offered by Brown and Root and the Swedish consortium, which have got certification by both the American Air Force and the civil aviation. They're the only actual processes that are accepted. And I see today that there was a release that in Australia a deal was signed for a hookup. But to go back to the SAF, I've made a note. Let's just check the figures here. Yeah, there's a switch from fossil fuels to renewable energy, and the aviation business really all ploughing into SAF, which is the hot topic at the moment. And the size of the aviation business that you have now, in 10 years' time, will be double what it is today. So there is an enormous growth, and people are looking at renewable fuels to replace fossil fuels. There's two pathways to produce those. One is from waste products, fat, animal fats, oils, vegetable oils, and the other is from wood source bases. They're the two pathways that work at the moment. And they are looking at producing SAF from methanol, and the forecast is that from Exxon and people like that, that there will be commercially available fuels by 2030. So these are the real growth areas that we've been looking at. There's a lot of confusion and figures out there that you get variance of 300 or 400% in what the values are, and there's a lot of fiction and not a lot of fact. So we're in the process of trying to ascertain what's real and what isn't. And the claims that are coming out, you know, there's not much correlation. 6 years ago, if you look for SAF on the internet, you would only find safety. Today, you can find several routes, but generally you don't get a response. So the insiders know the business. A lot of new people trying to come in and see it as an enormous growth opportunity. That's the hot subject for today. And the companies who are using it in Europe, I think, Yeah, Shell, Equinor, which is Statoil, Elf, Chevron, are all using SAF coming from Neste, who produce a thing called MySAF, MYSAF. You can see that on the internet. And they've got deals with Lufthansa and people like that. So there are products out there. We identified this as an area of growth back in 6 or 7 years ago, but at the time, not very many industry players knew what it was, and there wasn't much interest. But of late, it's become a hot topic. And only today, a contract was signed in Australia to build the first SAF plant in Australia. At the moment, they get their SAF from UK, from the British Heathrow Airport where they land, and there's no SAF available in their country.
Can you talk about the larger transition and that Stanford report? Give us an idea of
But the
scale.
Stanford report is a different thing. There's the cost of the switch from fossil fuels to renewable energy in the USA is estimated that it'll cost 62 trillion, I'm sorry, and to break that, it'll take 30 years, and it'll be broken down into the power sector, the building sector, and the transport sector. And there are other reports that were done in Europe which have given a breakdown that you will need for the next 25 years, 3.5 trillion a year for the next 25 years. And the power sector will need 24 trillion a year, the building sector 500 billion a year, and the transport 500 billion a year. So you can transition from fossil fuels to renewable fuels, but the cost is going to be high. And in the USA, you've got a problem with distribution, that the distribution network was built back in the 30s and it's not linked up. So the big cost there is going to be in the transport. And this is a lot of money. And at the moment, they haven't even started to spend a fraction of the cost. But that's what the figures are that was published by the government report that was published recently, done by Stanford. I think that's what Tyson's referring to.
Hey, so Tyson and Robert, can I just jump in here for 2 seconds?
Yes.
Maybe longer than
Go
2 seconds. So one of the great things about ChatGPT is that it can do financial models for you. So I took government figures and I multiplied them by the real experience of government expenditure. So like everything that's ever done in California costs 3 times more than the original budget. And so I think that it's about $2 trillion to install the electric charging stations in California, not considering the upgrade to the electric network you need to have electricity flowing back and forth, et cetera. So I think that an estimate of 60 trillion in the US is probably an underestimate by 2x. And I welcome everybody here who's financial. You can just run this model in ChatGPT. It takes you an hour to run it. You just say, these are my assumptions, give me the cost, et cetera. It's readily available what the costs are of building a station. I think it's $120,000, right? Jennifer probably would know.
Well, I'll throw a spanner in there. I don't disagree with your figures, but the interesting thing is, all of this is based on renewable energy. They're not taking into account fusion. And if you look at fusion, which is really of interest, Google and Chevron have invested 1.2 billion already in fusion. Chevron have invested 250 million. They invested 2 years ago, and they've invested in 2 of the main modular fusion plants. So the large oil companies and industries are looking in the long term. Some forecast as soon as 2030, others are 30 years away. But all of the national governments, China, France, America, are investing heavily in fusion. And if that comes of age, then it makes all these figures go out the window, because the whole economics is totally different. And you will be having fusion plants all around, desalinating water so it solves your water problems. You get rid of pollution, and they're hoping that this will reverse the global heating.
We have another question. Hold a second.
Could you expand further on the fuel, the jet fuel you're talking about? Because we're involved in, there's a company in Europe that's currently collecting oil, used oil from restaurants all over the world. And that company is processing that into jet fuel.
Sure,
here in the United States. Is that what you're talking about as one component?
You're looking at if you're looking at e-fuel, there's a study done by the European Lobby Group, and they've identified 45 plants in Europe with a combined potential to produce synthetic aviation fuel by 2030. The group says that 25 of the proposals are industrial scale and 20 projects are pilot plants. At the moment, there is the Preem, which is an oil company in Sweden, are building a large plant in near Uddevalla, which is to modify the existing plant to produce SAF. That should come on stream next year.
But he's asking about the
total investment for that. I mean, I'm just reading this is in Norway. The Air Shuttle invested in Norsk e-Fuel, planning to build large-scale electrofuel production facility with Nordic Electrofuel, has secured $40 million grant from the Innovation Fund to do that. So these are largely grants. The other plant that I told you about, Kellogg's Brown and Root, together with the Global Solution Company in Sweden, they have got two processes. Both of them are accepted by the United States Air Force, funded it totally, plus the Swedish government. They're the only certified products on the market at the moment.
The gentleman asked a question specifically regarding the feedstock, and that was oils from restaurants and the like. Do they have
the feed? There's two pathways at the moment. One of them is ethanol, which is produced from vegetation, from maize, from sugarcane, corn, staves, etc. In fact, China have just done a major study. They will be one of the largest providers in the world, and they're looking at hundreds of millions of tons of corn stave to be produced a year. But so they're the largest spender on this, and their plan is not to use that for aviation. They're going to use that biofuel largely for shipping, because you've got the biggest polluter is the shipping agent, because they use very heavy oil in the ships. And having said that, they're also building 28 coal plants. So the provision for the immediate future is to have coal to give them the electricity. They've actually got 368 new coal plants are in the pipeline to be built in China right now. However, their long-term research is to go away from coal into both nuclear and into using alternate fuels. And they're the largest producer of corn stave and products like that. The other route is to use methanol. The problem with methanol is that the process is not estimated to be available until 2030. Exxon and people like that are doing research and spending money. However, the amount of money that they're spending is nothing like what they're spending on nuclear. There's 10 nuclear companies,
Tyson,
and
Tyson and Robert, I hope that you guys kind of dive into. I think that Jim Peet is going to dive into this. Just the cost of the project finance of all this stuff is, amazing. I mean, these projects have been lying around for tens of years, dozens of years, trying to get financed, and for somebody gap financing, whatever. And I think with interest rates going up or being at the level they're at, it's far more daunting than ever before. I mean, right? I mean, that's a real obstacle. Can you discuss project finance repercussions, high interest
That-
rates?
Well, I would actually prefer to just roll on to Jennifer, and she can probably discuss that then.
Perfect.
Okay, Jennifer Warren, please tell us about the energy transition from your perspective.
Sure. So following up with where I left off last, I sort of thematically discussed this idea of, hybrid world, which is these decentralized approaches and centralized approaches, circular economy, and capital market liquidity. And all these things are still true. And I talked about it in December, but now I see them very much playing out. And I'm going to really discuss a lot of boots on the ground, like what is happening with the energy transition, because I know the numbers, I can see the trends, but I was just at a conference where it's boots on the ground, all these deals to do with all the oil and gas announcements that we've heard, and it interplays very much on the energy transition. Just to show you, it was NAPE, and it was 8,200 people in Houston, landmen, Bitcoin miners, blockchain council, renewables, you name it. It was the jamboree of all of it. And so I'm going to talk about, some of my learnings from that, that kind of goes along with the trends. So on the centralized approaches, I think all this consolidation that we're seeing in the oil and gas industry, all these announcements that have happened really within the last 6 to 9 months, if you total it, I just did, it's about $181 billion between 7 deals, and that's not even what's going on in all the underbrush. And there's a lot of implications to this. First of all, it gets to scale and efficiency. Second of all, it gets to shareholder returns, which are drivers. And also affordability, because this energy transition cannot happen unless there is accessibility to base load and affordability. And I think with all this consolidation, you're going, many of the oil and gas firms at the COP28 pledged net zero, and they're focusing on their scope 1 emissions. And at this conference, actually, I saw some really interesting innovators that are doing things like cleaning up methane emissions, Bitcoin miners, working with the grid, demand response initiatives. And that gets to my idea of decentralized energy transition. And that gets to innovation and disruption. And like I said, this I'm calling it mobile methane removal, where, they go to the site and remove methane and other greenhouse gases. Bitcoin miners, which are using stranded assets in oil and gas and in renewables, stranded wind farms, things like that. So there were a lot of deals surrounding and people interested in deals to do with stranded assets.
Hey, Jennifer, can you really describe what a stranded asset is?
Okay, for example, take some of the oil fields in, Wyoming, and outside, the edges of the Bakken, where there's not midstream assets for that production to get, on the pipelines. And so what you'll see is these firms setting up on site and collecting, gathering that gas and reusing it. As a matter of fact, this is really interesting, but let me hop to this in a minute. I really want to just highlight something really quickly to do with fundamentals before I get back into some of these, what's happening on the ground. First of all, with the energy transition, we're 102 million barrels a day of fossil, of oil. That's supposed to grow to 106 by 2030, according to McKinsey, who I just saw last week at this event. Now, what cuts oil? Possibly what Robert was saying. aviation, sustainable fuels, that's one place where oil demand can get cut. EVs, but as we know in the United States, there's some pushback happening on that, and I'm not going to go deeply into that. And then the other thing that's happening is natural gas and LNG. Natural gas is a transition fuel, but it's also a baseload fuel. And this merger announcement between Chesapeake and Southwestern basically is a play on natural gas and LNG. And it's a very opportunistic merger. And somebody at the conference cited it as actually the oil and gas industry doing something really proactive, and that's instead of defensive, which some could see these mergers as defensive. It's not necessarily defensive. There's a lot to all that. And with natural gas, it grows. They see it growing until 2050. It's for baseload. The rest of the world demands it. China, India, drivers, rest of the world demand. Same with oil. And power, one thing that was interesting at this particular conference, because it was really the underbrush of oil and gas deals and asset swappings and all this sort of thing. And it was the first time they talked about the power sector, electrons at this conference. And one thing that was really notable, and I talked about, some of the dynamics with power and power gen, in the last talk we did, Marty, but in the United States, we're an advanced economy, and our power generation has only grown less than 1% for the last, decade or so. Well, for the first time, we're going to be growing, it's expected 4% up to 2030, because data centers, cloud computing, hyperscalers, all of it, all of the demands on the grids for tech is a driver. And so I think because
So you're saying power usage is increasing
in the United States, it is expected to grow, which is really interesting, right? That was probably one of the most interesting number that stuck out in my mind. Now, there's a lot to that, right? That projection. And some of it has to do with the economy, how the economy grows. But as we know, I mean, if you look at the S&P, and the triple Q, there's a lot of expectation and momentum for growth. But alongside of that, all the oil and gas firms, large majors, independents, they're all finding ways to be more integrated. And there's this interplay between oil and gas and power increasingly, and natural gas is right at the sweet spot of all that. And so, so I think that's really, really something notable. The other thing,
Can we just level set on a couple of things?
sure.
Is the U.S. the largest exporter of LNG in the world?
I believe so. Now that's supposed to grow in spite of this Biden pause. That's just a lot of that's political, and there's a lot of investments, still going into US LNG, and that's a whole big story unto itself. But yes, and we're like 16% of the crude oil market. Our production is 16% of global supply. We export about 5 million barrels a day, and a lot of it from the Gulf Coast. Now, let me just switch to the Texas economy, because this will tell you what's...
I have one more question going back
Sure.
to a point that you made. And just to level set on the usage of electricity, I imagine that upgrading the grid and AI and robotics take up a lot of electricity, right? I mean...
Absolutely. They're energy hogs. Absolutely. And this is where I'm about to tell you, the Texas grid is the best example of really, it reflects the energy transition in real time and with deals and everything. So I was at the Dallas Fed on Friday, and they did a little outlook on the Texas economy. And, we're supposed to be still growing. We're running about hot on CPI. So that might be indicative as to some of this interest rate dynamics going on. But we're the worst case scenario. We're the hottest economy pretty much. Now, interestingly, we have our own grid, which is called ERCOT. we have more renewables than any other state. We have this and a lot of natural gas, 10% nuclear. And we've been having grid stresses when peak loads, like real extremes, like freezing weather and super hot days, all that's being reflected in our grid. And I've talked about that. And I talked about it actually in a video called After the Fed. It's on my X page. It's the top, it's the pinned item. And there's a video, and I go into deep detail about all this, including all of the data. I've got a lot of charts and stuff to do with that.
So Texas is kind of the canary in the coal mine when it comes to base load, right?
Right, absolutely. But here's the other really interesting thing. Not only is it canary in the coal mine on base load, it's also interesting to do with the transition, where the transition is in this petri dish of Texas. So in terms of exports in the United States, exports are flat. But if you add Texas in, they're much higher, and it's because of energy. In fact, there's a region in Texas called Brownsville, and then Corpus Christi. And the Brownsville region is the fastest growing region, and that is largely because of SpaceX for one, but energy. Both of those areas are driven by energy. So some of the other areas in the Texas Triangle, Austin, Houston, Dallas, all growing, still growth. But Austin's cutting back just a tiny bit. I think it's still like 3% growth, because the tech industry is normalizing its labor supply. And so Austin is a petri dish for that. But let me just say this really quick. So our energy exports in Texas, it was characterized as, it's not the transition. If you look at the energy exports in Texas, it's not reflecting the transition that is commonly discussed, in the media and elsewhere. And then you see all these deals that are reflecting this as well, where a lot of this capital is flowing. But it still means it's going to get recycled into absolutely innovation, like what Robert was talking about with the majors, trying to spend money in low carbon ventures. Absolutely, that's happening. And you see a lot of these innovators even in Texas. I met a lot of them last week. And the Blockchain Council of Texas is doing some really amazing work on highlighting how they intersect with energy as well.
Yeah, so I just want to get back to this whole blockchain thing. So what drives the need for blockchain is that, and actually there's really no need, but it's just spending energy at site, is that we had InQtel present 15 years ago, and they were saying, well, the problem with wind is that the windiest parts of the country aren't populated, and transporting wind is not great, right? So on the coastlines, they're not windy. But if you go like to North Dakota or places, Wyoming, they're very windy places, Canadian winds, right? And so what you guys have is you have oil wells with no transport to transport the energy that's generated, or the oil from, because as you said, it's on the barriers or boundaries of the fields, right?
Well,
and so
okay.
people are using those at that point in time, right?
Well, here's the deal. Texas is different in that respect because we have all the infrastructure. We have the most elaborate midstream sector in the country. Our infrastructure networks are very well, hooked up, and things flow the right way. In fact, I did this story called The Pipeliner's Dream in November, and it's all about the U.S. energy infrastructure and how all the basins, the shale basins in the United States, had to be connected, and who has done it? The midstream sector in the United States. It's a great asset. But what I'll say is, so to do with the wind resources and the solar resources, that's where a lot of obstacles exist. And in Texas, we built something called CREZ lines. They were these high voltage lines to try to move a lot of the wind from the Panhandle in West Texas to demand centers. And they spent many, many billions, and it was successful, but it takes all the buy-in to get rights of way and all this. There's not going to be those kinds of large-scale transmission projects going forward in Texas. In fact, they're spending $7 billion to encourage natural gas-fired power because of the problem with renewables intermittency. And we have really problems on our grid because of that. And I also wrote a story called Texas $1 Million Miles, and that has to do with transmission. Transmission is roughly, on average, $1 million a mile to add it. Call it 2 million, more in some places. And there are some grids that are trying to do some, larger scale projects. So this is a real mishmash, and this grid transmission issue is something that is a silent issue that's just starting to get talked about, but it's going to be expensive to
So
integrate.
I don't even want to get to that. So, I mean, as I said, half of our audience are finance guys, finance people, and anybody can do a model, but nobody here is even talking about the sourcing issue, right?
Yeah.
That China, I'm reading here an article, China controls 98% of all polysilicon in ingots and wafers that goes into solar panels. They produce 83% of all the solar panels in the world. I mean, seems like a strategic issue, right?
Well,
So-
absolutely.
so-
Yeah. I
And
mean,
also, if you create this upsurge in battery power and demand for solar, that's gonna, sourcing the components is gonna be difficult. Is that right?
well, definitely. And see, that gets back to competencies. Okay, so China's adding a lot of renewables and a lot of coal to back up those renewables because that's their competency, because they're like 2 decades ahead on processing critical minerals and everything you're talking about, the supply chain. And then Europe, in some respects, is trying to do the same thing, although, it depends on the country, right? There's a lot of policy driving this. China's spent like upwards of 600 billion on energy transition investment because of their competency, because they're a big fossil fuel importer. And they're trying to, and they want diversification. So it's really, a lot of policy is driving this, but in the United States, what's really interesting is the market really drives us more so than any other country in the world. And so if you want to see what the market thinks about the energy transition and different energy plays, look at the market.
Hey, Robert, do you have any perspective on components and sourcing and things like that? Robert Gibbs?
Actually, I was very interested to hear the last speaker because she covered a hell of a lot of ground, and I was quite surprised. In Europe, you've got a lot of pipework systems right the way through Europe. When it comes to transport, I did my master's degree back in the 70s, and it was on capital projects, oil and gas transportation. And if you look, the shipping of gas, LNG, is dominated by Air Products. Most of the 85% of the process systems are using their systems. The project when I went to Norway in 1976 was to put a floating LNG plant in Iran to go to Norway, and then the Ayatollah come along, and we had 7,000 people we had to move out of Iran. And the other project at that time was the IGAS system. That's the pipeline system from Iran up into Azerbaijan, which was the longest. And those were the projects of the day. And, still today, the shipping of LNG is family run. You've got the Bergeson Group, you've got the Hogue, their families, and Leif Hogue took their company back into private ownership. So my background has been on LNG, gas, and working with those groups all over the years. The problem that you have is storage. When you look at wind power, the wind stops. And it's a matter of interest in Norway and Sweden, there's a lot of the blockchain companies have set up there because they get their electricity free. In fact, they've been paid to take the electricity that was produced from the wind power because they couldn't harness it. So storage and batteries are the growth sector. But you've got to look at the main products at the moment are lithium, cobalt, magnesium, which 8 of the 10 mines in the world are owned by China, and they're in
Amazing. Yeah. So there's a real sourcing issue. So Tyson, can we move on to Peet? Jim's right next to me.
Absolutely.
I've known Jim for 20 years. Great guy. And he's in Florida these days. He used to be in Greenwich, Connecticut, and New York. So why don't you introduce yourself, Jim, and then we'll go from there.
Sure. You can hear me?
Yes.
Okay. So my name is Jim Peet. It's a pleasure to speak to you all. So I'm first a bit just about my background. So I went to Dartmouth. I had a degree in math, engineering, and economics, and a degree from Harvard Business School, where I was a Baker Scholar. I have practiced as an engineer, so I have comfort with technology. I worked at Bain and McKinsey, so I have comfort with business analysis. And I worked investing money at the Soros funds. I ran a venture capital fund for Lehman Brothers, and I've run my own broker dealer. So I'm have the series 7, 24, and 63. So I have comfort with financial analysis and the financial aspects of different deals. All of this combines in project finance. Project finance is the pathway to the energy transition. It's the mechanics of taking the ideas and turning it into actually getting deals done. So the elements of project finance are different than your typical investment in a company. When you look at a company, you're trying to see if that company is going to have a future. You're looking at what's going to happen to it in a constantly changing environment. There's changes in competition. There's new technology coming out. The company you've invested in will bring out new products. You hope that that goes well. And then at some point in the future, 4 or 5 years, you sell at a multiple of the capital that you put in, and the company goes on. Project finance is a lot more like debt. You're investing a bunch of money up front into a plant, and out of that comes a stream of cash flow. And it's that stream that makes it your money. At the end of that stream, there's no EBITDA multiple. There's nothing, that's it. That's the cash flow you've got. So the effort in project finance is doing the upfront work so that when you launch this bullet, it will go in the right direction. So the upfront work has several major aspects to it. One is obviously the technology. Lots of different technologies involved in the energy transition. Some are proven, many are not. And the degree of risk is obviously a big element for it. Another area is the site. It has to be built somewhere. You need permits, you need EPA activity and approvals. And then you've got an EPC contractor who's going to make all that happen. You have feedstock agreements. So if that plant is going to be there, you have to make sure that there's going to be enough feedstock, which could be municipal solid waste. It could be wood. In the case of solar, it's just making sure there's, the level of sun that's going to hit it. And then you have an offtake agreement. Very important. You have to sell the products that come out. This is all contractual, and it's all arranged in advance of the project being done. Then you've got the operations. There'll be an O&M group that will manage the project after it's done. And you'll have a risk mitigation, series of things you can do to make it so that this project will actually happen and not be become a problem in terms of specific areas that you've identified up front. So for example, you can often get insurance that will guarantee the output after the plant has been commissioned. And there are insurance firms that specialize in that. So you can reduce that risk and make it be more stable for the investors who are coming in up front. So that's the dynamic. That's how the things that we need to look for, it's all captured in a financial model. The key metric is IRR because it is debt-like. And there's a data room that will give backup to all the key assumptions in the model. So it's very much pieced together, and there's a sequence and a logic to how the pieces fit together. And that level of detail is what characterizes a project finance investment. The best way I think to see project finance in action is to look at the deals or talk about some of the deals. The company I run, Fairfield Investments, we've been active in project finance with partners to expand my scope over about the last 5 years. I've 100 some odd deals covering a lot of the major areas. So just covering a few of the different technologies and where you can run into problems. So for example, solar, you don't really have a technology problem. It's proven. The issue with solar is getting all those pieces together. And there are developer companies that exist just for that purpose. And then they'll sell it to investors once it gets done. So the challenge they face now is largely getting the interconnect agreements and power purchase agreements from the utilities. Interconnect in particular, because so many people in the US in particular have been asking for it, that the utilities are backed up. So many projects are stalled just by the inability to get some of these crucial contracts in place. Solar is a special case, well, one of several special cases supported by the IRA, the interestingly named Inflation Reduction Act. So a huge amount of that money is used to give incentives to solar and other technologies. So I'll just amend it on that. The Inflation Reduction Act gives you, in the case of solar, gives you a choice of incentives in two different ways. You can get a percentage of your capital cost refunded as a tax credit. And that can range from 30 to 60%. I've even heard 70%. 30% is a baseline, and then you get additional increments of 10% for US-based content, for meeting the sustainable, the prevailing wage rules. Then there's if you're in certain locations that are impoverished, you get more and so forth. So a great deal of your capital expense can be refunded as a tax credit. Alternatively, and it is one or the other, you can also get a 7 cent per kilowatt hour, of 0.7 cents per kWh credit on the production coming out of an array. So these incentives are significant in terms of the economics, all put into place with the intention of moving the supply chain from China back to the US.
Jim, is the financing, is this credit primarily, or you're investing equity?
The financing is a mix of debt and equity. The people would like to do as much debt as possible. And so the debt percentage will go up to 70%, 80%, but typically there's a piece of equity, 10, 20, 30%, and that piece tends to drive the debt. If you're the debt guy and you're going to put money into this, you want to make sure, if you're the equity guy and you're putting money into this, you want to make sure that the debt coming in is friendly, that they're not going to be, somebody's going to give you a hard time if there's a problem. So you want a debt guy you've worked with before. Yeah, I mean, everybody knows those stories. Yeah, amen, right? So it's a mix. And but the equity is not like typical corporate equity. People aren't looking for 5x on their money. This equity might come in and get a 30% IRR. The return is typically cash flow based. Yes, they could sell this to a third-party investor at some point.
Is this debt with warrants?
It's like anything else. The structure can be so variable. The debt can come in and it can have a piece of warrants. It can just have a high interest rate. It can have fees associated with it to give it some upfront return at financial close.
So project finance in this space is old. I mean, it's been around forever. Is there anybody who offers like warehouse lines on this sort of stuff based on off takers, or no, that doesn't exist? Because that's pretty, in the mortgage.
The debt is not usually the problem.
Okay.
It's usually the equity that is the challenge. There are three problems. No, you give me just 1 second. There's one problem. One problem is the equity, is getting the equity in place, because it's a riskier business, particularly outside of solar. If you're in municipal solid waste, a waste to value type project. A second area, and that comes up all the time, is the upfront money that's needed to get to what's called RTB, or ready to build. So somebody who's running a project, a developer, needs to have enough capital to get the engineering studies in place and do the legal work and get the permits and all the other elements that are required. It's not tens of millions typically, it's typically millions, but it's also typically more than most of these developers have by themselves.
Jim,
Yeah, Don.
we had a brief conversation, and I loved where you were going with concerning debt versus equity. Would the debt still apply if you have an entity in the United States, you're doing an arbitrage of the power purchase offtake agreement in like Mexico and taking advantage of the arbitrage? Would you be still interested, or would your groups or the folks that you work with still be interested in that type of debt? And with the tax incentives or the other incentives that you mentioned, would they still apply to the US entity, even though the power takeoff is with the government of Mexico, for example?
So interesting question on multiple fronts, and I'll try and remember to answer all of them. But in terms of the merchant versus contractual offtake, most of the investors prefer contractual offtake, and they'll take a lower return to get the certainty of a contractual offtake. So we're looking for multiple projects in Texas using different forms of energy storage, battery, but also compressed air. And to do that as a merchant type play based upon the margin, say, between day and nighttime rates in Texas is tricky. It looks very good now, but with all these different projects coming on board, what will it look like in 5 years? Well, that's the kind of risk that these investors don't want to take. If we can give them instead a 20-year contract for frequency regulation with a utility, they'll go for that. And then in terms of US versus Mexico, I don't know the specific answer to that question in terms of how to use it, but there is a company I'm looking at that is taking landfill gas out of Mexico, planning to inject it into the natural gas pipeline in Mexico and selling it to customers in California and getting RIN credits. So it's a creative idea. And so it is possible to get these different credits. At least they claim it is possible to get those credits.
Jim, I have two questions.
That is going into California. It's but RINs, it's going to California, but RINs is a nationwide program. I'm sorry. Do I have a question right here? Excuse me. Just a question before we go else. Yeah.
What I'm looking at here and what I've been involved in one way or another, when you're talking about transition from fossil to renewables, that is a significant, the dollar values that they're talking about, the cost of doing this is tremendous. It can't be done in the space of time that what is politically being spoken about today, not even a remote possibility. Additionally, what's going on in the world, it's so diverse in terms of it's not focused. So money is being spent and allocated in so many diverse ways, but it's not focused. Those alternatives themselves individually combined will not succeed in delivering the results that you want. It has to be more focused. And that's what I see the problem is. I'd like to see your view of this situation because, for instance, you were talking about, Jennifer, you were talking about the transmittal of electricity. Well, I have a product that would eliminate 35% loss in the transmission of electricity. Think about what that means.
Yeah.
Implementing that, the grid is not ready for it.
Right.
And
Right.
that's another problem.
Right.
Anyway,
So
the point being, how do you address that?
or Jim, whoever. Yeah. So in that context, the amount of capital required is just huge. I totally agree with that. It's not workable in the political world we live in. In terms of concentrated or diverse, I'm more mixed on that because there's a long history of concentrated efforts choosing the wrong thing, and then you miss something. And I'm just going to give one example of that. A company I'm looking at that is active now in dealing with this emission stuff in a whole different way. So we have a bunch of smokestacks for steel, for cement, for coal plants that have there's pollution control devices on them, but nothing controls the CO2 coming out of it. There's a known answer for that, which is algae. You can take algae, you can run CO2 into algae, algae will eat it up, grow, become a saleable byproduct, and return oxygen. That's the offtake, oxygen and moisture. So that's a great answer. But the problems are the only two ways that algae is grown now are in open ponds and in what are called fences, which are tubes with the algae in them and you pump the CO2 through it. In both cases, the output, the ability to collect or process enough CO2 per year, per acre is low. And that means that you have to have big open areas centralized far away from the sources of the emissions. So this company is marketing an answer to that, which is VATs. Now, a vat growing algae, when I first heard that, I said, isn't that the way it's grown now? That would just make so much sense. But it wasn't. And the reasons have to do with the dispersion of the smoke inside of a vat and how you handle it in a closed vat and how you get lighting into it so that you can actually grow it actively or grow it rapidly enough inside of the vat. This company claims, it's in diligence now, but claims to have solved those problems. It claims to get 1,000 times the productivity per acre of traditional approaches. Well, 1,000 times. Now, all of a sudden, what would have to be centralized can be local. You can go to a cement plant. You can put a vat on the land you can put a vat or a series of vats on the land that they own. Then you connect the smokestack, the EPC that the plant uses, their own guys can connect the smokestack down to the input to the vats. So that's pretty straightforward. It's already got the permits because it's a cement plant. So there's a solution there that arguably would be able to clean up the CO2 emissions plant by plant throughout the world and do it profitably. The stuff that would come out of this is either animal or plant feed. It sells for about $2,000 a ton. And at that level, there is an adequate, not a great return, but an adequate return from the preliminary numbers. There's also the potential to get higher value products out of that, like omega-3 oil, all grown by algae. There are 100,000 species of algae. This vat isn't specific to any one of them. It's just a grow machine. So any algae can grow. So it just as what would solve the problem of this huge CapEx that's being required? And it's not just huge, it's so multifaceted. So you need SAF for airplanes or hydrogen or something, some sort of compact fuel with a lot of energy density. You need something to clean up smokestacks. You need something to just handle the normal things that are going on and create energy in a cleaner way. And all those things are happening separately. And I think there's a reasonable shot we get there. I would just remind those of us who are a little bit older here that in the 70s, the issue wasn't global warming. The issue was global cooling. And the global cooling was a concern because there was soot coming out of smokestacks everywhere. And the concern was that was going to cut off the sun and we were going to enter a new ice age. And that was only, 50 some odd years ago. Well, I heard.
Excuse me, could I
says,
interject there? I was around in that period, and in London during the winter, you couldn't see a hand in front of you due to the smoke from the smokestack industry. So it's not exactly accurate what you're saying. The other thing is your interest on algae. BP spent a fortune on algae. Tell me one plant that works, because the economics are not viable. Where the CO2 is coming out of cement, it's from the source of energy you're putting into it. So if you're using electricity as the source of energy, you can cut down the quantity of CO2. The other systems that are being looked at is to take CO2 and amalgamate it with hydrogen to produce a hydrocarbon, which solves that problem. 2 plants are working. There's one in South America that's come on stream because they've got a lot of wind blowing there and they've got cheap electricity. That's the future, and that's where synthetic methane and products like this are looked at. The other thing you talk a lot about CO2 emissions. The bigger problem is methane emissions. It's only now that they've been able to examine methane from space. They couldn't monitor it before, and they're finding that is 10 times worse than CO2 emission. So that's going to put a stop on a lot of the shipping. The LNG transport and ships is a lot about operating skill. And you've got companies like Höegh, Bergeson, Nordtrade. They have been running ships ever since I came into the business. And I worked on the first LNG plant in Skida, Algeria, with Pritchard Rhodes using a French methane process. That was back in 1960, when I was very young. And I went out there with Peter Fagiano, who became the head of Jacobs. So this is a people business and it's politics. The rest of what you've said about the modeling, I agree. In fact, when I did my degree back in the 70s in Switzerland, we set up a joint industry project to come up with a project model to be able to model what the cost was so they could work out what the off-bank financing was. And still today, it is the building of that model, not the way you analyze it and the mathematics, but looking at the components that are in it. I worked as World Bank representative on the Escravos project for Chevron, and the financing of that was Chevron were financing their own share, and the NNPC were going to use finance. That was discussed, as you say, for 2 or 3 years. Cost overrun on that project was something like 3 times the original estimate. So, you know, and a lot of that was due to politics. So you've not mentioned political risk.
Absolutely, and there's political risk, but
hey.
Jennifer, I want to get Jennifer to comment for a minute, and then we have
Yeah.
to go to the next
Yeah.
panel.
Yeah, I can just in an overview way. That was the other thing I was going to say. If just to sum everything up, and for one, Exxon gave up on algae as well, and they're into CO2 and EOR, enhanced oil recovery. Resource recovery is really where it's at, as is innovation for grid integration. But if I had to say how this looks in terms of priorities, what the drivers are, which is what Marty's asking. Number one, economics. Number two, markets churning because of policy and geopolitics, people, Russia, Putin, Hamas, all of that, Xi Jinping, and that's something that I talk about and write about a lot. So yeah, the policy geopolitics factor, number one risk. I just gave a talk on a YouTube channel yesterday that's going to be about a lot of that. And then the other thing, aside from policy, people, and economics as the key drivers, physics, the environment, Mother Nature, resources. And that's the silent factor that nobody talks about in the right way, because it's really physics that's going to drive this in the end as well. And that's sort of what my natural capital advisory has to do with looking at that. So yes, in an overview way, the market is going to have to sort of help pick the winners, because policy can't always do it. And the market ultimately corrects things as we see, but it takes time, and a lot of policy can get in the way, i.e. like the Biden pause and all that sort of thing. But yes, methane, absolutely.
That was
It's-
crazy, the Biden pause, but yeah, we got to
Yeah.
wrap it up.
Yeah,
Last 10 seconds, Jen.
Gibbs is right. Methane is the, where you can get a lot of action quickly. The CO2 is going to take longer. And if you're just focusing on renewables, replacing fossil fuels, never going to happen. It is going to move to fission and fusion and base density,
Can I
Yeah, we
just
haven't
make
talked
one
about
point here?
petroleum
The
usage in everyday
Germany
products,
now
right?
are producing 50% of their electricity from renewables. Spain are producing 57% of their electricity from the renewables. The UK is 54% from renewables. So, and that's happened in the last 2 to 3 years, all as a result of the Ukraine war.
I'd like to
Especially
take
when you
I'd
look
like
at
to
the
take a
cost
deeper
of
dive on that.
electricity in
I'd like to take a
Germany.
deeper dive on on that data, on the renewables sometime else. Because
Yeah,
I think that
not the
it's-
whole story.
Yeah,
It's not
I
the
think
whole
that
story.
the issue, there's an Occam's razor issue with ESG, which is Europe has no energy, and geopolitically, from a defense point of view, we want to support Europe, right? And
We'll have to pick it up again.
yeah,
Marty,
so
maybe
Tyson,
next
that might
month.
be a topic of the future, which is, Germany's dependency on natural gas from Russia, right? So anyway, thanks so much, guys. Great panel.